If you've got good debt and you're managing the properties correctly, whether it's multifamily or retail, going forward, you have to put more money down.
Welcome to the Wild West Real Estate Podcast. And now, here's your host, Mark Hinteman.
Today's guest had a high-caliber career in corporate America, but realized he was trading his time for a paycheck and sought a better way. Today, he is a real estate investor and multifamily syndicator. He also manages mortgage notes and international single-family rental properties. I'd like to welcome Nick Andromidas.
Hey, Mark, how are you today?
Hey, I'm great. How about yourself?
Excellent. Glad to be here, and thank you for inviting me onto your show.
Oh, yeah. I'm excited to dig in, hear all about your story. I'm just looking at some notes. I see worked for Sony Pictures.
That's
What
right.
did you do for Sony?
I was in the home entertainment division in business development, sales reporting. I had a team of 25 people by the time I left. Started in the movie theater exhibition business, actually, and then moved over to the studio business. I was there for about 13 years.
Okay.
And then with all the changes in 2013 with going to digital and that wave,
Oh, yeah.
I became a dinosaur real quick.
Yeah, it seems like that has happened over and over in the entertainment space. It's like the technology
Yeah.
just keeps sending it into a new direction. And right now we're going through the same thing. Like,
That's right.
television is gone. My most shocking thing was just looking back is what happened to MTV.
Do you remember those in the 80s?
Yeah, I worked for MTV. I created a show for MTV, and
Oh, cool.
and it was the biggest thing in the world. It was the biggest thing in media for a decade, and then it just vanished.
Those are the good old years, right? With the gel in the hair and the pastel colors and
Right.
those were
Right.
good years.
Yeah, yeah. Or, a titan of media just like went up in smoke. I don't know. I'm still not really sure what happened to it. It might even still exist for all I know.
They still call themselves VJs, don't they?
Do they?
I guess
Ha,
video.
yeah. Yeah. Video jockeys. I work now on Family Guy with
That's
a
right.
former MTV VJ,
Okay.
and he's a real estate investor too. Damien
That's it.
B was his name. He was the host of TRL and the MTV Beach House.
That's awesome.
And he, I guess when MTV folded, but now he's a writer for Family Guy and a real estate investor. I am proud to say I helped him get his first like triplex.
Oh, is he on his own or is he invested with you as well?
No, he's on his own. He moved into and bought a triplex in Silver Lake,
Oh,
LA. So you
nice.
know LA. Yeah.
I
Yeah.
know LA very well.
Yeah. All right. So yeah. So how did you start?
So I started I'm not going to say my father had a duplex, so I've always had to help him out with tenants, leases. So, but I was kind of deterred from it because it was up. So I grew up in Montreal, Quebec,
Yep.
and it's not landlord friendly at all. I don't think anywhere in
Oh, okay.
Canada is it landlord friendly. So through there, I was deterred. But when I moved to LA in '95, I bought my own place and I was looking to invest. Did a few flips out in LA with a few other guys, but it just, I mean, I could have made more money somewhere else, right? Just with time, and we didn't have the right contractors. So what I did was I got into condominiums in Toronto, Canada. So that's where
Okay.
the international part of the real estate comes in, even though
Got
it's just over the 48th parallel, right?
it.
So through there, I wanted to scale up, and being a non-resident, even though I was born and raised in Canada, I was considered a non-resident since I'd moved to Canada to the US. And I wanted to scale up and just issues with banks. They don't like to give out too many loans to the same person. Setting up an LLC is not the same way. Securities and exchange laws are not the same as they are in the US, up in Canada. So I started investing in apartment buildings through syndicators.
Okay.
And I started coming out to Dallas, and I was out here maybe once a month. This is post Sony. So while I was at Sony, I'd bought the Toronto condos and did a few deals out in LA, flipping homes with three other guys.
Okay.
And then as I started investing in
Syndications.
apartments
Yep.
and syndications, I knew that was what I wanted to do. I mean, numbers are my thing. Give me a spreadsheet, and I can sit here all night playing with a spreadsheet. So numbers were my thing. And then when I came out here, I invested in I was in about 1,600 doors, and then a group asked me to be a KP. I'm sure you're familiar with a key principal.
Yeah,
Basically, they
sure.
use you for your net worth.
Right.
And so I signed on the docs with them. I invested in that deal. So you're not part of the general partnerships. You're not making decisions. But I
Yep.
started giving them feedback on a monthly basis, like, why aren't you guys looking at this? What's wrong? They would share the financials with us, and I would, send them back notes saying, hey, look at these three things, and I'd put them down on a spreadsheet. And so I helped them out on that. So when they went to get another bigger deal on the next deal, it was their biggest deal, it was 228 units. They asked me to be a GP on that. So that's how I got into being a GP.
Oh, cool. Hey,
And
while we're there, could you just distinguish between like a key partner and
sure.
a GP?
So if you're part of the general partnership, you're getting a piece of the equity. So for example, some deals, the promote fee, there's a lot of words that are out there. So it's a syndicator will take an equity piece, which could be 15, 20%. Some guys even take 30%. It's called a promote fee, a syndication fee, a piece of the equity. The GP shares that. A KP, they could get a piece. You get a smaller piece of the GP. A KP, you're bringing a net worth. So a
Right.
key principal is someone, if they're getting a $20 million loan and they're only worth, let's say there's a partnership of three guys and they're only worth, I don't know, 15 million, they need to find someone that's worth another $5 million. And
Right.
that's how they bring in a key principal.
Yeah. So a key principle is it could go any way, that you could structure a deal in any way you want, but often a key partner doesn't necessarily have to be active. They just
No,
have to be wealthy and be willing to, put
their
follow
signature,
their
yeah,
signature on it. Yeah.
on the
And
docs. Yeah.
use their financial strength.
In the beginning, it was funny. I think I was getting on the guy's nerves, but when they finally realized that there was some validity to the questions I was asking, I was only trying to help them out. Hence
They
why they
want
asked me hence why they asked me, hey, do you want to be part of the GP on the next deal?
Sure, sure. Hey, quickly, so were you in LA at the time and you were investing in Texas?
I was in LA when I was investing in Texas. And then it took about no, not even like 8 months after I got here that I got the GP where I syndicated a deal.
Okay.
Yeah.
Is that an operator still in business today?
It sure is. Yeah.
Sure is.
We still manage it and we're
Oh,
still dealing with it. Yeah.
oh,
It's
cool.
out.
So you still own the asset.
Correct.
Okay.
Correct. Yeah.
Oh,
Went through some tough times with COVID, just like everybody else, but we got through it. We managed it. We're doing well.
oh, excellent. And what? How long have you owned that at this point? That
So
one
we've
property.
owned it. It'll be 3 years, August this month coming up.
Okay. And is your experience with this general partner a good one? Is this something that you maybe you don't want to say this on a podcast, but
No, we all get along. We all have our strengths. We all bring strengths to the table. We work well. We meet. We talk once a week now just to catch up real quick. I mean, it used to be deeper conversations. Now it's like 30 minutes. I think half the time we talk about our families to make sure everybody's doing okay.
yeah.
And we meet with the property manager via Zoom. It used to be on a weekly basis, but now it's every 2 weeks.
Okay. What's your preference? Do you like being just a key partner that is passive, or do you like getting, rolling up your sleeves and being part of the operator?
Love being part of the operator.
Okay.
That's what I love. Making sure that the business plan is being executed correctly with the property manager, making sure, doing market surveys. I'm trying to find someone to help out with the weeds, but yeah, just love my favorite part is when the distributions come around and I get to calculate those and send them off.
Yeah.
That's the best part.
So you participate in some of the reporting. in the
Uh,
distributions to investors?
Correct. Yeah. Yeah. We keep the reporting simple. And believe it or not, I think maybe we've got like 80 investors, maybe 5 of them really look at the financials. Nobody care. Nobody.
Yeah, I'm sure. I'm
Yeah.
sure they're, if you're like my syndication, yeah, maybe 80% of them don't kind of glaze over it or maybe never even open it. But there's a few of them that will kind of dig into it and they keep us on our toes, which is good.
It's good.
You know,
Absolutely.
you want them
Absolutely.
to be involved and, you know, want them to be, overseeing what they've invested in.
And my biggest thing is helping them educate. If someone ever calls me for a question, I've got, and if I have the time and it's a good time of the day, I'll spend time with them to explain to them, because the more they know, the better off and the more secure they feel.
Yeah. The
So,
more confident they'll
com-
be.
and then hopefully
Hopefully,
they'll write me
hopefully
a
they're
check
confident.
again, right?
What's that?
Hopefully they'll
Yeah.
write me a check on the next one.
Right. Check again. Yes.
Yeah.
As long as they don't get alarmed when, when they look at your statements. But that's cool. And what was the size of that property?
So the property that I asset manage now is 228 units.
Oh, cool.
It's out in Abilene, Texas. It's a secondary, tertiary market. Depends who you
Okay.
ask.
Yeah.
It's growing. It's got a lot of universities there: nursing, pharmaceutical. There's a technological school out there that's pretty big here in Texas. Amazon just opened up a fulfillment center. I think it's like around 50 employees maybe. But then there's another manufacturing company going out there, a cheese company from Wisconsin that's going there for packaging. So it's slowly growing.
Okay. Oh, cool. And do you have any of those single family properties up in
Canada,
Toronto?
Toronto.
Toronto?
Yeah, I got rid of everything now, so I need to update my bio. I sold the last one last June 2021, and no more the next single family home is when I buy my home. I've been here in Texas for just over 3 years, and no more investments in the single family, just multifamily, maybe some commercial strip, retail
Sure.
centers if possible. But I like the multifamily space.
Yeah. It seems it's pretty solid, pretty dependable. And
It's
you've got
it.
a
Go ahead. Sorry.
I was just gonna say, you've got a big market, a big playground in Texas. Like you got Dallas, you've got Houston, you got Austin,
You got the
um,
Golden Triangle, right?
the Golden Triangle. Is that what they call it?
That's what they
Okay.
call it. San Antonio, Houston,
Oh, right. Yeah, I
through
forgot.
yeah,
I
all the
can't
way up to
not
Texas.
include San Antonio.
Right, right. No, yeah, it's a hot market, right? Florida, Texas, but who knows what's going to come up, and then I think it's going to stay. We'll be okay, but we're all going through. We'll see what happens in the next 9 to 12 months, right? With
Yeah,
everything that's going on, especially
yeah.
after today, with
Especially
the
after today.
with
I
the interest rates.
Okay. Did they
But
announce
yeah, another three
3/4?
quarters of a
Okay.
point, which we all expected.
Yep.
So we'll
Yep.
see what happens.
Yeah. Keep. They've been dropping the past couple weeks, which may be meaningless when this comes out. This podcast comes out. But yeah, I don't know. I mean, I don't feel too nervous, and I went through 2001, 2000 and Great Recession, and those felt worse to me than, I mean, we just have inflation. I think, Russia and Ukraine and that could get out of control, but hopefully not. And hopefully we just go through a mild recession.
The good thing in our business, Mark, is that everybody needs shelter. They need a roof over
Yeah.
their head. If whoever can survive this, if they're not over leveraged. I've talking to a few veterans and people that have gone through some bad times, and they made it through. And they said the reason why we made it through is we weren't over leveraged.
Yeah.
So if you've got good debt and you're managing the properties correctly, whether it's multifamily or retail, I think going forward, you have to put more money down. I mean, first of all, the banks are not going to give you, forget about the days of 75, 80% LTV. It's more down to like what, 15, 65, between 50 and 65%, depending on the NOI. So
Yeah.
you
Yeah.
don't want to be over leveraged right now.
Yeah. I think you hit the nail on the head. I think your biggest vulnerability, if the economy turns south, is over leverage. And, provided I don't see that as much as in 2008, like where everyone had 90% leverage. They just don't give that out anymore. They learned their lesson in
It's right.
2008. And so now it doesn't seem like as big of a threat, but some people, as always, some people will get burned, and most sensible operators
It,
and
it's a good thing. Whatever happens, you need to clean out the
excessive.
bottom of the
Yeah,
excess fat, right?
right,
So
right.
it's all good. It's good for an economy. So we'll see
Call
what
the
happens.
calling the herd, is that what it's called? I don't know what the term is.
Yeah, there's a few words, but we'll keep it clean. But yeah, it's make yeah cleaning out the herd and or
Yeah,
no cleaning out the weeds or something like that. And so winter's coming, like everybody says, but we'll see how bad it gets. I don't think it's going to be, especially in Texas. I think anything, and nothing against the rest of the country. I lived in California for 25 years, so. But whatever happens, they say Texas is the best place to be in. Well, whatever happens, so keep our
yeah,
fingers crossed.
yeah, right, right. So, yeah, have you gone into anything beyond that pretty large multifamily property? What are you doing now or doing next? Are you shopping?
Well, I've always been a buyer. I just haven't found the right deal that pencils out. I've put in some LOIs, but didn't make it to best and final. Best and final meaning if 20 people put in a bid, they're going to take the top, top three, four, five. The guys that they know can close. I've made it to a second round, but always lost out, and it was just pricing, right? I
Yeah,
just don't want to take the chance, and we have a fiduciary right to our investors' money. The last thing I want to do is lose someone's money, right? I mean, if it happens, it was completely out of my control. That's what I pray for. Buying, and I'm also looking now at some development. I'm working with another gentleman here in the DFW area that I met through GoBundance, and we're looking at maybe some Airbnbs, but it's on a big private. It's 50. We're looking like at 50 acres, and doing
okay.
something where it's a weekend retreat and people can rent out cottages, maybe have
Ha,
masterminds and meetings, stuff like that. You got to think outside the box, right? Because I just don't want to sit on the sidelines and
yeah, yeah,
wait. Still looking at multifamily, but I
yeah.
don't think there's still that huge gap between what the seller and buyer are willing to pay, or for the seller to give up and the buyer to pay.
Right. In it's not a bad thing to not make it to best and final when things are in hysteria mode where
Yep.
prices are up that high. This is probably, most people will have no interest in this comment, but is it Dirk? Is that the who does those, like that big
Yeah,
acreage?
he's got where is that? Is it Wyoming
I
or
thought
in
that
the
was in
Dakotas?
Texas. I thought that was in maybe
That's
North
right, Amarillo.
Amarillo. That's
Now I
right.
remember clearly. He's in Amarillo. No, this is more of it's gone in an event center. So we're trying to figure out what, weddings, weekend weddings. I mean, you can write the summer off. Not, it's too hot here in Texas. There's a parcel that we want to where we would sell off and maybe develop in the area where it's located. There's a lot of homes on 1 acre, so that's the type of stuff that we're looking at. It's fun. I love anything with development. There's cottages on there now. That I think HDTV did some kind of special. They built these 7 cottages for the previous owner, and they did a great job. So we're thinking of bringing on more homes and just making it. If there's a wedding, the whole family, like 50 people, can stay on the property.
Oh, cool.
So, and the spaces where, the weekends where there's no event, maybe someone can, we put it on the Airbnb or try to rent it out. But again, we're just doing our due diligence. Took a tour of the property a couple of weeks ago, so it's still I'm being underwrote, still
Yeah.
underwriting it.
Yeah. Okay. That sounds like a interesting new direction that could be fruitful, hopefully.
Yeah, yeah, yeah. Like I said, we're and we try to be risk averse. So crossing our T's, dotting our I's, and seeing what's the potential, and so it's an interesting deal.
Yeah,
Yeah.
good. And do you you talked a little bit about this. Are you thinking that you will join like a syndication team, or will you do you would you think you're going to remain autonomous and be a key partner on with a variety of operators?
I definitely look at the multifamily business as a real business. So I'd love to end up in, maybe in 10 years, have a family office where at some point I'm going to get tired of doing the asset. I mean, I'll always love doing the asset management part, but you don't want to be in the weeds either. Where you have a team that manages everything and you start growing a portfolio. And I like the long term game. A lot of the syndicators now are in for, it used to be when I first started in 2018, 3 to 5 years. Now they're saying 5 to 7. I wouldn't mind holding it long term, buy and hold, right? Get the right financing, finance it out, give people back their money, and hopefully take that money and build wealth and buy another property. That's what I'd like to do and be vertically integrated. Property managers out there, no one's going to take care of the property like if they're directly reporting
Have a
to
stake
you.
in it, right?
Right. And have a stake. Yeah. If they want to, yeah, if they have a stake in it, that's even better. So where they're directly reporting to you and you can hire and fire, because changing out a property manager is not easy. Right. And they have their systems and their ways of doing things. And they're just there collecting, it's going to sound like I'm putting them down, but a lot of the syndicators are never happy with their property managers, but they're collecting their 3% on gross, and we're paying the salaries, and they've got no skin in the game. So they're just, I hate to say it, but sometimes most of them are just babysitters, right? They just sit
Yeah.
there and
Yeah. It's hard to find a good one. And
yeah,
most operators cycle through multiple property management companies until they find a good one, if they ever find a good one.
yep, yep, yeah, it's tough.
What's a trait that has served you best both in real estate and in life?
A trait that has a good question. My patience. A lot of people think I don't. I think in the last 5 years, I've really been working on patience, listening to people, and perseverance. I know you asked for one, but I think I just gave you three. But if I can pick from the three, it'd be being a good listener. Listen to what they have to say. So, for example, when I visit a property, I know if the property is doing well or not. You look at the numbers. I talk to the manager. I'll take them to lunch, and it's like, hey, what's going on? Can how can we make your life better so that so that the tenants are happy, or what can we do you have any ideas? Let them lead, right? Because they're there, they're the front line, and they know exactly what's going on more than I do. So it's listening, not with the iron fist, right? Sometimes it's needed, but as least as possible, but just listening to the people that are running the properties.
Yeah, I kind of feel like the more you rise up in an organization, the more that you're like a servant leader, the more
Yes,
effective you'll be. And
yes.
morale will be higher and you'll accomplish more.
If the employees are happy, the tenants are going to be happy. Tenants are going to pay. I get to pay the investors. We're all happy.
Yeah,
Yeah.
that's great. How about, is there a daily habit that you'd say brings you the most benefit?
There's two things that I do now, especially since I joined GoBundance: reading in the morning and working out.
Okay.
Those just starting my day off and starting off early. I was never an early riser, but now there's some days that it's hard to get, sleep in, meaning like 6:30 a.m. But I try to be up at 5 a.m., read maybe 10, 15 pages of a book, go downstairs, work out, come back and start my day. And I like to be sitting at my desk at around 7:30. Yeah.
Oh, nice.
Yeah.
Nice.
Yeah.
I like, what about it? Do you think there's a habit you need to break?
Oh yeah. There's plenty, and I'm working on it. One of the biggest things that I realize now is I want to get into I want to be a lot healthier. Moving to Texas 3 years ago, plus COVID. So it's all my I'm responsible. I'm the only one. I'm going to be pointing a finger at me, but the excuse that I use is I came to Texas and I couldn't get enough beef in me. Right? It was all those good steaks, and
Barbecue.
then
Yeah.
COVID hit. So put on some COVID weight. So now working with a few brothers in our group, it's just my health pillar is the number one right now. Is just trying to have a better relationship with food, respect it, because it doesn't love us back, and just try to get healthier so that I could live as long and an active life as possible.
Yeah. That's great. I love it. Well, cool. Are you ready for our question round?
Yeah,
All right, let's jump in. The book you've recommended most over the past year.
I've got it. Who, not how. by Dan
Okay.
Sullivan. That's the
Oh, nice.
out of the latest books that I've read. I'm reading another one now. Recently I've gotten into the banking. I'm reading Central Banking 101. It's the book I'm
Okay.
in right now.
Oh, so you're gonna figure out what the Fed is doing.
Somehow just try to figure out what's stupid. Yeah. Yeah. The better I understand it, the better I'll feel in making better decisions. But who, not how, is
Yeah.
one of the good books that I just
I haven't
recently read.
read that yet, but I hear a lot of people recommend it.
It's great.
It sounds
Yeah,
like something I got to read.
yeah.
Do you have a favorite quote
I'm
to
gonna steal this from a Columbia Pictures movie, Sony. But I don't want to say the person that said it. You guys will know it. You can say, don't hate the player, hate the game."
hate
Do
the
you remember what movie
Yeah,
that is?
I know that quote.
Don't hate the player, hate the game.
Yeah, yeah, I know that quote. I don't know what movie it came from.
It was Will Smith in Bad Boys.
Oh, okay.
Remember it? Don't hit the player.
Right. Right, right. Okay. Oh, great.
Yeah.
I asked this question. This is almost like one of my standard questions, but what was your favorite movie when you were 15?
I think it was Grease. John
Grease.
Travolta, Olivia Newton-John.
Oh, totally.
I was in love with
Epic.
her.
Oh,
I
yeah.
had a
She's the
big
best.
poster of her in her leather pants.
Yep. That's one of those movies that is just a little bit magical. Everything kind of came together. The casting, the music.
I loved the Star Wars stuff. I wasn't a big Star Wars buff. Give me Rocky. Loved all the Rocky movies.
Rocky. I got to show my daughter. I have an 18-year-old daughter who now every morning goes to like a boxing gym, and
Okay.
she's never seen a boxing movie. I'm like, you got to see Rocky.
Yep. Yeah, absolutely.
Uh,
Classics.
yeah, definitely. Aside from real estate, one thing you could spend all day talking about:
Family.
family. All right, I like that.
Yeah, love my girls.
How
All
many
three.
girls do you have?
I count my
Wife.
wife to be.
Okay,
So she's got two daughters. So my three girls. They're going to be
awesome.
10. They're going to be 11 and 9 in September, October.
Okay,
Yeah.
great, great. I have three girls. Um,
God bless you.
what was your most awkward year?
What was my most awkward year? Financially, professionally, anything?
Anything, anything. I would say, my answer would be seventh grade.
Oh, okay. We can go back that far. My first year of university. So this is gonna tell you guys how old I am. 1993. My first year of going away for school.
Okay.
Yeah,
Yeah.
getting away from the family, getting away from the tribe, right? And
Right.
just hanging out and meeting new people and different cultures. And it's like, oh wow, it's a lot more out than just the family circle.
yeah,
Yeah.
definitely. And just about lastly, when are you happiest?
When I'm with family and they
Okay.
listen to me talk about real estate,
Yeah, yeah. They're forced to listen to you talk about real estate.
it's amazing that I call them, they're my children. I call them my 10-year-old. She'll come with me to the property, and the little one will want to go out and pick like chestnuts or something, and whatever's falling off the tree. And she's more artistic. The older one just sits right next to me. She wants to hear everything that's being said about the business. When I'm talking to the manager, she'll just be right by my hip. It's
Really?
amazing. I love it.
That's
I'm
so great.
keeping my fingers crossed that she's both of them, but that they're going to be the future CEOs. So
That's
yeah,
great. That's great.
yeah.
Yeah, good for you. I'm trying to do the same thing with my three girls, and I don't know. I don't know. I
The
can't
the
really tell
the
if
the,
they're.
tr- the trick is I mean, don't force it. Just
Yeah.
they'll see what you're doing. You can ask them for help. I asked the eldest one to help me with some labels and some easy stuff, and she just, why am I doing this? And then I started asking her, what is it that you do exactly, and just slowly throw out there. Sometimes they don't care, but
Yeah.
it's amazing when she comes with me and we visit the property. She just, no, I want to hear everything that you guys are talking about. And it's awesome.
I love that. That's amazing.
Yeah.
So cool. How can listeners reach out to you?
Best way is LinkedIn. I try to keep it simple. They can just look up Nick Andromidas and they'll see me. They'll see that my work experience back in LA, now in Texas. So there's a few Nick Andromidases out there. So, but this is the only one that's got the facial hair, I think.
Yeah.
So they'll pick me off. They'll know who I am.
Yeah.
LinkedIn's the best way.
LinkedIn. Okay. Awesome. Well, we'll put that in the show notes. And yeah, thank you for joining us and sharing your story.
Mark, thanks for having me on. It was a pleasure. I look forward to seeing you soon. It's been a while since we saw each other, and
yeah, no kidding.
Look forward to the next time we're all together.
Yeah, it's rare that I get to meet somebody who works down the street in another studio.
I have to do a trip up California, so the next time I'm out there, we'll definitely grab a beer or dinner.
That sounds great. I'd love that.
All right, Mark. Thanks a lot.
Nick. Have a good one. Okay, see ya.
Bye.
Thank you for joining us for the Wild West Real Estate Show. If you like what we're attempting to do here, please subscribe so we can continue sharing these with you. And if you want to check out our website, it's quantumcapitalinc.com. You'll find podcast episodes as well as multifamily properties we're looking at and how you could potentially participate. Look forward to seeing you guys soon on the Wild West Real Estate Show.